All right, hi guys. Welcome back to our weekly trading forecast for the week of 7th December to 11th of December. So welcome back. Haven't seen you guys for like 2 weeks probably. Yeah. But anyway, let's take a look at the dollar index. So last week we saw that the dollar continues to fall. It came down very fast. Mainly because I think this is actually the fifth wave of a Elliott wave. So since I'm talking about that, let's just take a look. Okay. So on the chart you can see that these two patterns. Okay, the Elliott wave is almost similar. Let's talk about 2017. Okay, so in 2017, at the beginning of 2017, somewhere at 103.6 or 7, okay, is highest level. So it came down, okay, from 5 wave, okay, the Elliott wave, and finally found support at about 88.4, and then it just went up all the way. Not just did it found support right here, you also found support at this this rising trend line, 9.5 years or almost 10 years rising trend line, or you can just call it a monthly trend line. So it's in the biggest time frame. So and we saw that the dollar index, okay, went back almost back to the same previous high. Highest was about 103. And as it reaches the same high, it came down again, forming another Elliott wave very similar to what was being formed in 2017. And right now, what we are seeing is that it is already forming the fifth wave. Okay, so but the difference is this: number one is that previously in 2017, okay, it's just a high and it just came down. But right now, in 2020, the high, because it's a previous high, therefore in the entire market, okay, right now it's actually forming a double top in the monthly time frame. All right, so that's a very strong hint, telling you that dollar could be in for a very great fall. Secondly, it did not found support at the trend line anymore. This monthly trend line was being broken when it actually formed the third wave. Okay, but it came back again so very strongly. Okay, so I do believe at this level there could be a lot of buy orders being trapped or whatsoever. Okay, but anyway, after which when it started to form the fifth wave, it's a clean break. Okay, it's a clean break. So we have many breakthroughs, many breakouts for the dollar index, and all points to a bearish dollar. And of course, with the fundamental, as we know, the COVID situation in the US is still getting worse. It's still like hitting record highs and stuff like that. They will still need to print more money. They'll still need to ease monetary policy further. They still need to come up with more stimulus package for their people to help improve, recover the economy. One thing that they haven't started to really talk about is negative rates, and if that really happens, then I think dollar will have another historical fall. I don't know. But as of now, technically speaking wise, dollar is definitely going to drop even further. And I think this week or throughout the entire December, we can look to sell the dollar index. All right. So with that in mind, first level, I think for dollar index, we look at the 161.8% of the Fibonacci extension. So that is somewhere at 89.89. Why is that so? It's because previously for the fifth wave in 2017, okay, it actually fell and found support at the 161.8%. Right, so that is one of the reasons. If you go even further, of course, we can look all the way to this 6-year support. 6 years, am I right? Yeah, 6-year supports. And that is also the neckline of this, what I just mentioned, the monthly double top. Okay, the monthly double top. Right, so you can see that if this really comes down, if it breaks the neckline, I think it can go all the way. We can just put a Fibonacci lowest to the highest. Look at 61.8%. And this is also an area of breakout. I'm talking about this symmetrical triangle previously, right? So when there's a breakout, definitely there will be supply and demand. So this is the breakout, right, at the 61.8%. So this is the final level I'll look at for the time being. Okay, unless there are even more negative news, such as Federal Reserve wants to adopt negative rate, we will see. Okay, so that's for the dollar index. So if we are looking to sell the dollar index, then of course, when we look at the euro dollar, we technically speaking, we want to buy. All right, so very similar situation right here. Okay, similarly in 2017 for euro dollar. Apologies for the slow connection right here. Okay, so the Elliott wave, okay, I'm not going to plot it out. Okay, in 2017, similarly, okay, found resistance at the monthly falling trend line, came all the way down, almost back to the previous low. You can see that this is the very major support. So it's a previous low, forms a double bottom, went up, broke above the monthly falling trend line. So everything points to a bullish euro dollar. Therefore, we're going to keep buying euro dollar. And right now it's forming the fifth wave again. Where can we look to? Previously, it go all the way to above 161.8, almost to the 200%. So similarly, if we take the same action right here, okay, all the way to 161.8 is still a little bit away, but all the way 200%, 1.23 or 1.24. Definitely, I believe you can go up all the way to the neckline, okay, at 1.25. Right, 1.25 will be a very critical level. So yes, so since we're talking about euro dollar, let's take a look at what price we can actually continue to buy euro dollar. Maybe I just delete away all the lines for now. So number one, I think we can always pull a trend line. Okay, always pull a trend line. Let's say it goes all the way back to the trend line. Hopefully it doesn't come down too fast. Okay, if it's forming like ABCD kind of retracement, that would be the best. Like it just goes down like this. Okay, goes sideways. Maybe found some support right here. There's a bit of demand right here, and then it goes down even further and reach this demand level right here, and just nice at the trend line. Then that would be the best price to buy. So I mean, there are two levels that you can look at it. Okay, in fact, this is another Elliott wave that's forming right here, and if I were to plot it out for you, it looks something like this. First wave, the second. Okay, the corrective wave right now, and once you reach here, you can look to buy again. So this pullback right here, okay, previously. Okay, hopefully we can use this as a reference. Take this as a reference, all right, for the current retracement. So that will bring us back to about 1.2 flats to buy the euro dollar again. But however, if dollar is really very weak, then it might just rebound somewhere at 1.21. So you can start to add position as it reaches this level, add small position. As it goes down, you add even more. And stop loss just maybe somewhere at 1.195. 1.195, I think that should be very enough. Okay, so that you have to decide for yourself. So that's for euro dollar. All right, next, I would like to pass my time over to JJ to share his trading plan for the week. So JJ.
First for me will be pound dollar. As you can see, pound dollar is currently at around 3 years, 3 to 3.5 years supply zone. And this week you can see price actually attempted to break out, but came all the way back down, forming this long wick candle. So actually, I think that pound dollar would start dropping this week. So, and also on the larger time frame, we can see that this is actually the middle of the entire Brexit range. So definitely this area would have some very strong resistance. So if you're looking to sell pound dollar, current price will be okay. Back to the next level of resistance, which is this area. You can see a resistance and support area. And ultimately, I'm actually expecting pound dollar to fall back to this this trend line before, if it's going to go up, at least it will fall back to this trend line first before we can look for stronger support. And next would be dollar CAD. So we can see dollar CAD actually this week for the past 5 days, it's been going down consecutively, which is actually due to oil prices. You can see actually oil, after breaking out of this range, it's been climbing steadily and actually broke above this very long-term supply zone. You can see on the smaller time frame, it's actually like a break and then retest, and it actually got supported. So because of strong oil prices, dollar CAD has actually been steadily falling. You can see that actually this is the third wave down. So this third wave actually is currently in a it's actually in a very long, since around Feb to March of 2015 of this level of interest. So actually I'm expecting dollar CAD to be supported here, and if we can see support here, then definitely we could look for short-term buys back to this supply zone, which was the previous low, and we can see price got supported strongly here twice. And if price does come back to this level and it gets resisted, then definitely we could look to sell dollar CAD again. So this will be my two analysis.
All right, thanks JJ for sharing pound dollar and dollar CAD. All right, so watch out for it. Now next, coming back to my screen. All right, next we're going to talk about the gold. So well, the gold is definitely a very interesting one to look at. I have so many lines right here. Give me a second, I'll just delete all the lines away. Okay, right, so in the daily charts, daily time frame, last week, all right, so it actually found very strong demand at the 4-month demand zone, a slightly break below, but came back. Okay, it's also supported the 200 moving average. Very similarly to what happened previously when there was a very big fall right here in March, okay, during the COVID cases. So it found support 200 moving average at the 4-month demand zone. Strong rebound this week, as you can see, goes all the way back to the supply zone right here, above 1,850. So I think for the gold, we may want to take a look at the entire retracement, the entire pullback. Now, if some of you think that gold is going to fall even further, you got to think twice, because definitely in the bigger time frame, okay, just now you did see this rising this channel, price broke below, and it is a indication that it will fall even further, and it did. Okay, it did. There's multiple waves already, so this is over. Okay, let's just put this away. And if you look at the bigger time frame, let's say we go to the weekly time frame. This is a ABCD, if you can see, right? So it's a corrective wave for the gold, and it has been completed. Okay, has been completed. Even if you go to the small time frame, daily time frame, within the ABCD, there are minor ones right here as well. So maybe let me just, okay, A, B, C, D, very obvious here as well, A, B, C, and D. So if this is what has completed, and last week it did show us a very strong bullish trend, then we could look to buy the gold from now onwards. This could be the end of the entire retracement, even if we go all the way back. Okay, yeah, all the way back here. This is 2008. Okay, very similar thing happens last time. Right, very strong sell-off. Okay, the price range. Okay, completes another wave. All right, not sure about what happens right here. It actually broke new low. Okay, will it break new low again this time around? I don't know. Okay, but it's more like a retest of the previous low, and then it goes up, and then from there onwards, you just keep going up. That's this during the 2008 financial crisis, and I think we have a similar kind of crisis right here. probably an even bigger magnitude. So even I mean the bigger time rate is already very oversold. Now there's a rebound. We want to see if the price can break above 1,850. If it's able to stand above 1,850 next week, then definitely that would be a very, very strong indication for us to buy the gold. So in this week itself, I think we can still look to sell intraday or as a swing trading. So going to a smaller time frame for hourly charts. I think the first level we can look at is somewhere right here. Right, obviously a lot of a buy and sell going on at this zone, 1,826 around this level. If it goes down even further, then I think we can look at this price. Okay, resistance came up, turn support, rebound, goes up even further. That will be 1,816. So two levels to look at to buy the gold. All right, just watch out for. Just watch, okay. Just watch and see if you can get a chance to buy at these few levels. All right. So that's very straightforward for the gold. And last but not least, the US30. I think with what the government is trying to do right now, we have seen, okay, US30 or the entire US stock market is just going up. Endlessly, just keep going up. I think as long as the government continues to keep interest rate low, continues to provide stimulus, the US stock market will continue to go up until the time comes where they need to start to tighten interest rate and stuff like that. When there are news like this, telltale signs that comes out like this, then we will see a bigger pullback for the US stock markets. Or even a crash, okay, that I'm not too sure, but I think going forward for the next few months, we are probably going to just keep buying the US stock market, the indices, okay, in this case, Tesla also joined the S&P, all right, so S&P 500, you can actually go and take a look as well. So there's nothing really much I want to talk about the stock market, but just to let you know, if you are still trying to sell, previously I was trying to sell, right? Doesn't work. So, yeah, if you want to sell, you may want to reconsider about it. Last but not least, I just want to talk about dollar against Japanese yen. Right, I think the yen has a strong potential. Okay, it has a strong potential to strengthen even further. If we look across all major currencies. Right now, the weakest one is US dollar. Okay, I think everyone should know that. And followed by the Japanese yen. The Japanese yen it just seems to be being pressured for some reason and is not able to strengthen. But I think it has a potential to do so. So at least against the dollar index, against dollar, it is still stronger. So for dollar against the Japanese yen, I think we have a case to continue to sell. If you were to just look at, I just remove all the lines. You know, there's a channel forming right here. Very obvious one. You know, falling channel. So right now the price is just ranging in the middle of the entire channel. So you can just simply wait for it to go back to the previous high, obvious supply zone right here. Between 104.60 to 105, 40 pips zone. And you can continue to look to sell a dollar index. Should be quite a safe bet. You can also see the price has been registered at the 100 moving average. Or when it's somewhere at the top of the Bollinger Band, you can look to sell when there's overbought sign. So it's actually pretty straightforward. If let's say you cannot find any trade, dollar yen could be a pair you can look for. Just trade within the range. All right. So and just now, when I was having a conversation with JJ, we actually talk about euro yen. Something you might want to consider. Okay, in the monthly chart, is actually right. Is it euro yen or pound yen? Okay, if let's say we are talking about pound yen, then you can see that it is also very near to the top of this trend line, and there is harmonic patterns. In fact, there's a double harmonic pattern forming right here. The first one you can see is this, right? And then after which it forms another one, a smaller one right here. So right here is for me a bearish bet. Wait for it to go a little bit further. You may start to sell. Okay, last Friday when it closed, there's a very strong pullback. You may start to sell. Add position as it goes up to within the level of 141 to 142. Within this zone, okay, you can continue to sell. Okay, as long as it doesn't break and close above this falling trend line, okay, in a weekly time frame, I think there's a very good chance to sell the pound yen. Very good profit to be made out of this trade. Target wise, just look all the way back to the 61.8% of this entire formation. So somewhere right here, 137, or you can look all the way to this 61.8% right here. Okay, obviously good support as well, 131.9, and near to the bottom of the range. Okay, so that's the last one I want to share. And with that, JJ, anything else you want to share from here?
Oh.
All right, so thank you so much. Hopefully you have some great ideas from here, and wish you all the best for the week for the trading. So see you again this week. Thank you.